What is going on, you guys? In today's video, I'm going to be talking about the pros and cons of investing in both stocks and real estate. And at the end of the video, I'll tell you, in my opinion, which one I believe is better for you. If you like these kind of videos, also make sure to hit the like and subscribe button, as that would be a massive support for me in order to build my YouTube brand, as I plan to post in this channel on a weekly basis. So thank you guys, and I hope you enjoy the video. So let's first start with the stock market. There are a variety of ways of which you can invest in the stock market. For example, you could pick individual companies such as Amazon or Apple. And of course, this approach is more for a person who has a higher risk appetite because of the risk associated with that. For example, the likes of Warren Buffett, Peter Lynch, and Carl Icahn, or some names that I could name that have made a living off of just investing in individual companies. But they themselves actually tell you to invest in the S&P 500, which is pretty much a fund that consists of the 500 largest companies here in the United States. And so if you're more conservative, that is the better approach. On average, you can expect to get around a 10% gain per year if you invest in the S&P 500. And this, of course, is not adjusted for inflation, but if you adjust for inflation, it comes out to around 7 to 8%. So for each dollar that you were to invest into the S&P 500, you can expect a gain of around 7 to 8 cents on the dollar. So it may not seem like a lot, but of course, when you start to scale that, the numbers start to add up. And then you also have to take into account the fact that you could also benefit from compounding interest. So for example, each dividend that you receive from the S&P 500, you reinvest it into the S&P 500. And then, of course, that starts to accumulate more and more. And over time, you can expect to, double, triple your gains. So who's the stock market built for? That is going to boil down to individual preferences. If you're an individual who likes to invest in highly liquid assets, meaning that you're able to sell and get your cash back pretty much in the same week, then the stock market is for you. Because with real estate, it could take up to 45 to 60 days after the contract is signed. Another thing that the stock market has is that it's easier to diversify compared to real estate due to that same reason. The fact that you could just buy and sell your shares in the same day, and all you have to do is open a brokerage account, which takes less than 10 seconds. Now, of course, there are also downsides to this. For example, due to the ease of entry to the stock market, you are more prone to make decisions based off emotions rather than calculated investment analysis compared to real estate, because real estate is a much larger transaction, for example, and it involves hundreds of thousands of dollars. So it's not something that you just wake up one morning and say, I'm going to go buy a house. No, you can't do that. Whereas with the stock market, you can. And now let's talk about real estate. Right off the bat, one of the biggest advantages that you're going to get with real estate is the fact that it is a lot more easier to understand relative to the stock market. With the stock market, there's going to be a lot of valuations that go into it. For example, some people like to use discounted cash flows. They look at EBITDA, and then they look at a bunch of ratios. Whereas with real estate, it all boils down to pretty much 2 or 3 ratios, and the objective is always the same. You buy the property, and then if it requires any fix-up, you fix it up, and then you sell it at a higher value. Another thing that real estate offers that the stock market doesn't is the fact that it is tangible by nature. You could feel, you could touch, you could smell real estate, whereas with the stock market, you cannot. You only own individual shares in a company, but it's inside of your phone. You don't even get stock certificates anymore, unless you actually ask for them. Another advantage that real estate can offer you that the stock market probably won't is the fact that it is a hedge against inflation. And 2022 has been the perfect example of that. For example, we have seen sky-high inflation, and we've also seen home valuations rising up just along with it. And we have also seen rentals go up with it. Whereas with the stock market, it has been the opposite this year. The S&P 500 has been taking a dip, even crypto assets have been taking a dip, and the technology sector got destroyed, practically speaking. This, of course, can be largely attributed to the fact that we have also came off a pandemic, but it should also be noted that, real estate has had a long and rich history as being a bet against inflation alongside with gold. Another huge benefit that you could get from real estate is the fact that you're able to amplify your returns due to the use of leverage. So for example, if I want to purchase a $500,000 property, all I would have to do is put a 20% down payment, which would be around $100,000, and I get to benefit if that property gains. So for example, if the property value goes up 5% for 1 year, that would be a $25,000 gain to my net worth. Whereas if I had bought a property outright with that same $100,000, it would only be $5,000. So you can see why a lot of people are inclined to invest in real estate compared to the stock market. That is it, you guys. I hope you liked and enjoyed this video, and please turn on the notification bells for next week's video because it's going to be an interesting one. Thank you until next time.